first time here, and great place to be. So I'm continuing on with the theme that we've heard from a lot of people about raising the level of education within the ecosystem. You know, for the last 10, 15 years, we've had the early adopters come in and jump into Bitcoin and to the blockchain. And now with the SEC approving the ETF, we're seeing a lot more widespread adoption. But the clear theme is still people don't really understand it. And if they don't understand it, we're going to repeat some of the pitfalls of the past. So it's really important from my perspective that we make sure that we are being transparent. We're making sure that we're educating our clients on whatever it is that our service that we're offering to them so that they know what they're getting into. So Ledn, our mission is to provide world-class financial services to the 450 million plus digital asset holders worldwide. We're democratizing finance so that people in unbanked or underbanked communities around the world can have access to financial products. We are a lender against Bitcoin collateral. We pay yield on Bitcoin, ETH, and stablecoin deposits. So you can think of us like BlockFi, which is a name that everybody knows, but unlike BlockFi, we're still here. And the reason that we're still here is we take our risk management very, very, very seriously. And one of the things that I get asked a lot is, why did BlockFi and Celsius and Voyager and many others go bankrupt in 2022? Well, let's look at the Bitcoin pricing. So this chart looks quite familiar. You know, we've seen the price rally significantly, but I want you to look at this chart. The first chart I showed you was 2022. This is today. Well, it's last week. Charts look very similar in their shape. We've got euphoria back into the marketplace. We have people who are jumping into the marketplace to grab Bitcoin and earn yield on that Bitcoin and others. But what we know happened after the highs in 2022, we saw this. Now, I'm not saying that this is what's going to happen this time around, and I certainly hope it's not, and I don't believe it is. I've personally got a target in the next kind of 5 months of Bitcoin that are 6 figures. But the question I get asked a lot is, why was this such a precipitous drop? Well, we know that there were 2 events that caused massive stress tests for companies. One of them was Three Arrows Capital, the failure of Three Arrows Capital, and the other was FTX, Alameda, and the fraud that was perpetrated there, and the spin-off effects that came down from that. But my question that I think is kind of the key one is, yes, those are 2 very big events, and yes, that was going to cause a sell-off in Bitcoin pricing. But why did it cause so many failures in corporations? Well, the answer is greed. And anyone who knows me really well knows that I think greed is not a bad thing necessarily, but I think you have to be very tempered in what it is you're doing within your organization, and you have to make sure that people who are interacting with your company understand what it is you're doing. So let's kind of break down this thought of greed. There's 3 things that were impacting companies like BlockFi and Celsius and Voyager and Ledn as well. One of them was the investors wanted the valuation of the business to grow rapidly. The valuation of the business at the time in 2021, early 2022, was a very simple formula. It was the value of the assets you had on platform divided by about 3. That gave you your company valuation. So if you had 600 million in assets on platform, your company was worth about $200 million. If you had 1.5 billion, your company was worth about $500 million. And so the incentive for the companies was to grow really, really quickly their assets on platform. To do that, the easiest way, pay really high yields on absolutely any coin available. So they did that, and we saw the assets on platform grow super fast, and the valuation of the company went up. The VCs were very happy, and the owners were very happy. However, in doing so, they were taking huge amounts of risk because you don't have unlimited amount of cash, and so as you're paying this yield out on these coins that don't have a market, then you're burning cash and you have to do something differently. What did these guys do differently? Well, They decided to take risks with their client assets in order to justify those yields. They would take a non-yielding coin. Let's take at the time Solana didn't have a lending marketplace. They'd pay high yield on Solana, they'd swap it into dollars, they'd lend out the dollar stable coin, and they'd hope that the value of Solana didn't go back up, so when their client withdrew the asset, they would be able to buy it back cheaper. We know that didn't happen. We saw a lot of failures there. The other thing we saw is that they were willing to lend assets to institutions without doing proper credit underwriting. And so Three Arrows Capital, great example. They wouldn't provide any financial statements. All they provided was a net asset value statement. But there was nothing to back it up. Turned out there was really nothing to back it up, and so they all failed. So what do? Well, to us, education is the answer. We ask our clients to make sure they're asking these key questions. Does the company have a track record of success in the lending space? Did they manage through and survive the collapses in 2022? Are the assets utilized on platform to generate yield? How are they doing that? Like, it's really important that clients know that. Can a client verify the platform's proof of reserves? Can you prove as a lending protocol that you have the assets that were entrusted to you? And do they have proper risk management policies? So Ledden takes that very seriously. We have a track record of success, 0 loan losses in 6 years and over $5 billion of loans. Did we manage to survive through the collapses? We have 5 straight years, almost 6 now, of uninterrupted service. We never paused withdrawals for any of our clients. We never lost a Satoshi or a cent, and we never paused withdrawals. How do we offer the better borrowing rates? We have what we call an open book report, which we put out monthly, showing you where all your assets are, what they're being utilized for, how much is in custody, how much is being loaned out to high-quality institutions, and what are the risk management policies. Our risk management policies are on our website. We offer them up to everybody. They're very, very clear. We're improving them all the time, but as I said, we've never had a loan loss. And we bring this from 30-plus years of traditional finance experience in risk management. TradFi does a lot of things poorly. One thing they do is manage credit risk really well because they don't like to give money away to anybody. So I think it's important for clients and for founders to really ask themselves, because they know that their clients are not getting anything for free, the clients need to ask themselves, how is it that they're generating yield for me? There's got to be absolute transparency, and any company who's not willing to provide transparency should probably not be trusted. Clients need to be educated, and you need, as a firm, to commit to safety and security. That way, a rising tide lifts all ships. We will, as an ecosystem, continue to grow and attract more and more new entrants to the space. Thanks very much.